let's dive right into the topic. I think I also speak for the entire audience here if I say that we feel uncertainty is actually always increasing more recently. Now, that's just a gut feeling. You have done a lot of research on that. So tell us, what are the key challenges we as leaders grapple with, and how do we actually react to that uncertainty?
Yeah, you're totally right. My research is more relevant than I've ever wished it would be. We live in a time of unprecedented uncertainty if we think geopolitical challenges, economic, ecological ones, technological ones. So all of these uncertainties are steeply increasing. And when we think about how to react to that, often the first step can be that we think about the bad outcome. You know, our trade model doesn't work anymore, how do we fix it? Technology, we thought VR is the future, oh, we have to pivot to AI. But what the research shows, what the data shows, it's not just the bad outcomes that can come from these uncertainties, it's the uncertainty itself. As a company, as you're about to engage in some next steps in terms of your investment, you're kind of stalled because you don't know where the path is going. So what happens as a company? Either you end up in paralysis or you run the risk to go all in on a technology which won't be the future. All of that also aggregates up. So as a macroeconomist, I see all this paralysis in terms of investment aggregating up to less growth, less creativity, less innovation. And that's exactly what we want to avoid. Now, there's no beautiful answer how to avoid it. Basically, we all have to find our path, navigating between these two extremes, avoiding both the complete paralysis and the one-sided bet. That's at least the macro perspective. Now, for you, sitting in the cockpit of a global tech company, how does that translate into your daily life?
Yeah, actually, I really like this metaphor of a cockpit because as a CFO, you do consider yourself a little bit as a co-pilot, and you have to figure out, given that uncertainty, and uncertainty blurs the picture basically, how can I come back to control, see all the available paths that are available to us to take action. And if I look at AI and bring that into context, I ask myself, isn't AI the engine that can give me that kind of transparency a pilot or co-pilot has in the cockpit of a modern aircraft? You know, you see all the instruments in front of you. The data is actually coming to you as opposed to you having to chase the data. And you also shed a lot of tasks by automating things, so you can really focus on what matters to keep the aircraft on the right trajectory. Now, why is that so important? We have what I call a triple whammy of challenges in our businesses. The growth pressure is not easing. I mean, all the adversities you describe are actually dampening growth, but we have to deliver results to customers, to shareholders. Then there is regulation. Makes our life much more complicated, especially in Europe. I think we all know what I talk about. And last but not least, we have to constantly transform businesses. So it's becoming a moving target. And that's why I think basically AI gives us this unique opportunity to establish a suite of solutions that are kind of the avionics of an enterprise. And enterprises are much more complicated than aircraft actually are.
Okay, so I'm very glad to hear that you think our airplanes are traveling safely, and moreover, that waiting is not an option, that we have to move forward with investment. That's, of course, what as an economist I want to see, so we actually will have growth, that we don't run this big risk that the economy will flatten out in light of all of these uncertainties. Now, what type of moving forward, however, right? So waiting is not an option. Blind investing, I assume you also want to avoid that one-sided bet I was talking about. So some kind of moving forward that's conscious of all the options, real option thinking. How do you approach it? As economists, we often think about, maximize the worst outcome, but that really doesn't give you the edge. That makes you risk falling behind because you're just focused on avoiding the bad outcome. So you need to be willing to experiment, to have some regrets, but I suppose in a portfolio type of way?
Absolutely. The option is important. The flexibility is important. And we see a lot of enterprises, and that's also true to some degree of us, SAP, that have been over years creating some rigid structures to run the businesses in. And that is not giving you the maximum option value. Now, with the volatility increasing, the good news is actually the value of the options are increasing. I think somebody earned a Nobel Prize for that insight, the Black-Scholes model that some of us learned at business school. And you have to ask yourself, so how can I create the maximum options, and what are the no-regret moves that contribute value independently of the turn we're taking in the world? And I do believe, as a CFO, one key priority is to create that absolute transparency about all the options you have end to end, because if you don't see them, it's hard to monetize them. Now, how do you see actually on a higher kind of political level, on a geopolitical level, governments dealing with that kind of flexibility thinking, creating options and so forth?
Yeah, I hope they're listening to us too, because this drive to get all available data, to think about flexibility is sometimes missing. The temptation is instead very often in times of uncertainty to kind of retreat back to the safe grounds. You can think about just domestic production, you can think about reshoring or even friendshoring, but we have to be aware that no block of countries can create the same benefits the globalized economy, the interconnected economy has created for us. Of course, there are concerns. There are concerns about unequal distributions of winners and losers, and we should be aware of those. But we would be nowhere near where we are today in terms of availability of goods and services, from medicine to technology, if we didn't have an interconnected global economy. So from an economist perspective, the answer is not to raise barriers. It will always be to lower barriers, to allow more connections, to build bridges, not to tear them down. Which doesn't mean that we shouldn't discuss who are the winners, who are the losers. Ignoring that has been a problem for many countries, including the US here. But the flip side is not protectionism, is not reshoring. That's not the solution. So instead, I think some of the strategies you mentioned that are relevant for you on the corporate level, to think about it in a portfolio way, to diversify, to create a more resilient system, is what countries have to do as well.
You're talking about resiliency. I think the one topic you see in finance a lot is the concept of diversification.
Yes.
When people invest money, it turns out that if you have a limited risk budget you can take, and that's also true for corporates, the broader you look at the options you can execute, the better chances you have to blend these options in a way to give you a more robust return on that limited risk budget. And I think that's something we really have to thrive for, to get that ability to execute on that. And that leads me to the concept of really creating these options on a global level, and I think it was nicely highlighted in prior presentations here, to, the same way an asset manager has to pick from the global assets, that you also pick from all the courses of action available to the corporation, and not only in one silo, driving a local optimum, but really driving it across the entire enterprise. So I think there is a lot we can learn from academics, and I'm very grateful that you have been here to teach us some about that.